analysts cast doubt on $30 trillion valuation for tokenized RWAs by 2030, suggests $1.3 trillion. Asset tokenization, Ethereum tokenization, the $30 trillion. Projection was initially put forward by Standard Chartered Bank, last updated August 28, 2024, at 11:15 GMT3. Author Ruholamin Haqshanas. Author Ruholamin Haqshanas about author Ruholamin Haqshanas is a contributing crypto writer for Cryptonews. He is a crypto and finance journalist with over 4 years of experience. Ruholamin has been featured in several high-profile crypto. Author profile share. Copied last updated August 28, 2024 at 11:15 GMT3. Why trust Cryptonews? With over a decade of crypto coverage, Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our long-standing presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews. Some in the crypto community have cast doubt on a recent projection suggesting that tokenized real-world assets RWAs could reach a staggering $30 trillion by 2030. Among the critics is Jamie Coates, chief crypto analyst at Real Vision, who believes that a more realistic valuation is closer to $1.3 trillion. In a recent post on X, Coates pointed out that if the current compound annual growth rate CAGR 121% for tokenized assets continues, the market could indeed reach $1.3 trillion by 2030. $1.3 trillion is still impressive. While this figure is significantly lower than the $30 trillion prediction, Coates argues that it still represents a substantial increase that could have a profound impact on the broader Web3 ecosystem. Tokenization of assets involves converting physical assets, such as real estate, bonds, art, and stocks, into digital tokens that can be traded on blockchain platforms. The process is seen as a way to enhance liquidity, transparency, and accessibility in traditional financial markets. The $30 trillion projection was initially put forward by Standard Chartered Bank and consulting firm Synpulse in June, which forecasted that RWAs could reach this valuation by 2034. However, Coates considers this estimate to be overly optimistic and cautions against expecting such exponential growth in the near term. Even with a more conservative estimate of $1.3 trillion, Coates suggests that the on-chain presence of real-world assets could trigger a massive flywheel effect across other areas of the crypto industry, including non-fungible tokens, NFTs, social platforms, and gaming. However, the analyst also raised concerns about how the value generated from these tokenized assets would be distributed, particularly on the Ethereum network, which has been the preferred platform for many traditional financial institutions venturing into blockchain. Coates argued that much of the revenue might be captured by layer 2 networks, leaving Ethereum's base layer with only a small fraction. This scenario, which he refers to as the Ethereum dilemma, highlights the challenge Ethereum faces in scaling its network while competing with more efficient layer 2 solutions. Tokenized asset market could reach $2 trillion by 2030. Coates' cautious outlook is echoed by other industry experts. McKinsey & Company recently reported that tokenized financial assets have had a cold start, but are still expected to grow to a $2 trillion market by 2030. Meanwhile, a report by the Global Financial Markets Association (GFMA) and Boston Consulting Group estimates the global value of tokenized illiquid assets will reach $16 trillion by 2030. Even more conservative estimates from Citigroup suggest that $4 trillion to $5 trillion worth of tokenized digital securities could be minted by 2030. Recognizing this potential, major companies are making significant moves in the tokenization space. Goldman Sachs, for instance, plans to launch 3 new tokenization products later this year, driven by growing client interest. It is worth noting that both public and private blockchains are witnessing the inclusion of our various assets. Follow us on Google News.